Let's get started. The other people that really cooperate every day with this relationship are our analysts. They are as much of a part of what happens on the radio as Dave or I happen to be, maybe more. Without them, it just doesn't happen, and I'm really glad to have four of them here with me this morning to talk a little bit about cash grain. You hear them either in the morning talking to Dave or with me in the afternoon, sometimes both. Aaron Curtis is with us. He's from Midco. Aaron is on Monday mornings at 8:50 a.m. He talks to Dave from Bloomington, Illinois. We're so glad to have Aaron with us. Next to him from Channel Seeds and Bennett Consulting out of Windsor, Illinois, is Matt Bennett, and Matt joins me on Thursday afternoons. I told Matt the biggest problem he has on Thursdays is that Zwicker is in front of him. That's also a good thing. The problem for Matt is that sometimes I get so involved with the conversations with Dan that I have maybe a minute and a half to talk with Matt, and I try to give him some more time occasionally, so we'll get through that process too. Next to Matt, of course, is Chuck Shelby. He's with Risk Management Commodities out of Lafayette, Indiana. Chuck joins us on Commodity Week, and then Bill Gentry. Where's Bill at? Bill over here. Hi, Bill. Bill joins Dave in the mornings at 8:50 a.m., that on Wednesday morning. So somebody out of Risk Management Shop is with us all the time. And Sherm Newland, too, is with us, and he does the Commodity Week programs. And right next to Chuck is Greg Johnson from the Andersons. Greg's probably been on the air as long as any of them, I think. Yeah, well, ouch. Ouch. You know, these relationships, Cooley's in the back, but these relationships go way deep. They really go so far, and we learn a lot about each other. I love to talk with Greg in the afternoons, Amy Sage as well from the Andersons, and a few other folks from those facilities across the Midwest. They give us a really good idea of what's happening in the cash grain marketplace. All of them do. But Greg, I want to start with you and talk about. Well, let's not start with you. Let's start with them. Can we start with them? Let's do that instead. How many of you, everybody hold your hands up. Everybody hold your hands up. Okay. Now, everybody keep them up. They all have old crop corn to sell. Uh-oh. Isn't that right? I could have asked you how many had old crop corn to sell, but you know, I don't know. But yeah, no, I have old crop corn. They all have old crop corn to sell. We know that. They have a lot of old crop corn to sell. So let's deal with it to begin with. Maybe you could lay out for me, Greg, what the situation stands like this morning before the World Agricultural Supply and Demand estimates are released at 11 o'clock in the Central Time Zone.
Well, I would say that there's very little doubt among most of the analysts that we have an abundant supply of old crop corn, 1.8 billion. You know, we may tweak it a little bit, 100 million bushels one way or the other, but 1.8 billion is sufficient. We're not going to run out of corn until next fall, and hopefully we have a good crop next fall. But so that means that we need to lower our sights, you know, and be realistic. We have a very important planning intentions and quarterly stocks report out on March 31st. I personally think that the corn acres will be lower than what a lot of the traders are assuming. If that's the case, we may get a small bounce, and I emphasize small bounce. I'm friendly corn. I'm not bullish corn by any stretch. If we get a 20 to 25 cent rally, I think we want to use that as an opportunity to get old crop and new crop corn sold.
So can we make $4? Because that's what they really want.
Everybody wants 4. I would put my orders in at $3.95.
Put them in at $3.95, and when it gets to $3.90, do not change it to $4. Right?
Exactly.
Because that's what happens, right, Matt? That's what happens.
Cancel if close.
Cancel if close. Is that the name of the order?
Yeah.
So Matt Bennett, really, are you in the same thought process? They all are thinking about $4 for old crop corn, but maybe not.
Yeah, I would say so, and I probably echo his sentiments fairly well. I mean, I think most of us in this room had a really good crop. You know, if we look at what our margins are for the 15 crop going into it, you guys know as well as I do, it's a little bit tight, or a lot tight, depending on your farm and whether you're in a high input situation. So when you look at the kind of yields you had last year, I would be very cognizant of the fact that you don't want to let this get away from you because you do probably have profit on the table at the kind of yields most of us had in this region of the world. You go to other parts of the Midwest or other parts of the Corn Belt where they didn't have a really good crop, it's a little bit tougher to talk these markets because the bottom line is for a lot of us, marketing mistakes were kind of covered up by big yields. So moving forward, I'm probably more along the lines that I'm a little more friendly to the new crop, but old crop, you've still got huge supply and there's a lot of it to come to town.
Aaron Curtis, when you talk to producers, first, how big an area do you draw from at Midco there, the elevator in Bloomington Normal?
Well, the elevators, customers that we use is mostly Iowa and Illinois. A few in Wisconsin. We get as far down south as Alabama. So,
how many facilities total?
well, we have quite a few customers. The grow market itself, they're involved in. It's
just a big grow.
It's a big group, yeah.
Okay. Is there a difference, as Matt stated, from one side of the Corn Belt to the other as it's related to how much corn has been marketed, or does everybody just have a lot on hand?
Well, there's still quite a bit, but I think if you get in the central and southern part of the state of Illinois anyway, I think we've seen producers move a bigger share. You get farther into northern Illinois and into Iowa, we got elevators that are telling us they still got, 60-65% of the corn still to buy, which is a large share of corn on old crop compared to where we usually are at this point. And I think, I don't think the market's stupid enough to know that that's not the case. I think we get to the point, at least in our office, we know when the phone rings that the country's out buying corn. Seems like we continue to get a day or two away from buying a lot of grain from the old crop, and then the market kind of tails off. We'll get up to that 392 area in March corn. We hit that a few different times, and then we'd back off, and it seemed like we were just a day or two away from starting to buy a lot of corn as the market would get closer to $4 futures. Obviously, we hear the same thing that you're talking about, Todd. A lot of producers want $4 cash, and that's why I think you got to just continue to be a little cautious here, because typically in the past, when the producer owns this much grain, the market's going to have a hard time rallying, at least in the short term. So I think you need to be like Greg said. I think you need to maybe be a little more cautious on your sites here as we move forward, because I think the market is aware that there's quite a bit of corn out there to buy. So the need to rally is probably a little bit less than maybe what we've seen in previous years.
Is it a game of chicken at this point, because they remain fairly flush with cash, not necessary for them completely to market their grain, but the market will have to have the corn at some point. So they're waiting it out because they can, and you're going to have to bid.
Yeah, I think that's one of the positives, obviously, in the corn market. It's a very hungry situation. I mean, you do just look at the domestic use. We're using 950 million bushels of corn a month, and then you factor in the fact that we got exports on top of that, too, so that pushes that over 1 billion bushels a month, and the farmer continues to be a very inconsistent seller. And so we continue to see, that Cedar Rapids to Decatur processor market continue to be the highlight of the Corn Belt, and here we're seeing all those markets posted at overs on basis. And why is that? Because the farmer just continues to be just a reluctant seller, and the cash market continues to have to do a little more of that work. And like I said, it's a big hungry mouth that the corn market has, and that continues to be a positive, and that continues to support basis.
Well, we're 5 minutes into the show, and I'm out of questions, so you're going to have to help me out at some point. If you have questions, just raise your hands up, and we'll get them answered. But it is a process. You've seen me do this before, where I really do need your help. And you can just yell it from the back or write it down, and I'll take care of it. But if you've got a question, raise your hand, and we'll get those done. Chuck, let's talk with you just a little bit. Producers, and you're a farmer as well as a broker, really are waiting for that $4 cash price on old crop corn. They really do have corn in the bins. They really are willing to let it sit. Have you been willing to let it sit?
No, we're basically at this point pretty much out of corn on our farm. We're moving out the last part of it. Basically, on our farm, we're out of corn. We're in the process of moving out the last part of it. I think of those of you that are holding corn know, I think the key to whether that's a good or bad thing is, number one, what the acres are going to be has been mentioned. This one? Oh, okay. As you look forward,
I want you to use that
Okay.
one now, let's shot.
all right. As you look forward, we're going to start out with a pretty good yield. If we lower acres and we end up with a 160 type yield, or we see some weather concerns, the carryout on the new crop corn with a consistent demand gets 1.1, 1.2, somewhere down in there if you have a yield closer to 160. So as we progress through the season, if you want to hold on to your old crop corn and you want more than $4, that might be a reason to do that. At this point, again, we've got to have another reason beside old crop is there's enough to go around to make $4, give or take, the price that the market is comfortable with.
Why don't you follow up on what you think best practices are at the moment?
Okay, I was preparing for this. I was looking back last year at what I said because I kind of forgot what I had said. But thank goodness it was on YouTube. You can go out to YouTube and catch us for better or worse. But December corn a year ago today at this meeting was $4.86. $4.86. And old crop beans were $14.23. New beans were $11.81. And all of us on the panel said we were in agreement on beans, sell beans. They could go a little bit higher, but we thought they would go lower. They ended up going 75 cents higher in the next month after we spoke. But that $14.23 price in the fall was, I hate to remind you, $9.12. So, and corn was down in the low threes. So, I think, at least I think, on beans, we're in the same situation as we were a year ago. We're going to have way too many beans, and China right now is buying beans from us, and even though South America's got a big crop. So, we could go a little higher in beans over the next month, but the big picture on beans is a lot lower. So we definitely want to get beans sold. And as far as corn is concerned, in the short run, we can go 20, 25 cents higher. But in the big picture, last year we went down to $3. We're looking at the same kind of carry out, unless that March 31 acreage number is low, or unless we run into weather problems. But you have to assume normal, and I reserve the right to change my mind after the March 31 acreage report, because if that number is a lot lower, then then we'll have to reevaluate. But assuming that we get somewhere close to 88, 89 million acres of corn, we want to sell small rallies.
And follow up on acreage.
Yeah, I think whenever you talk corn acres, going around the corn belt, talking to people in the seed industry, it's a pretty common theme that corn sales are off just a little bit. Bean sales have been very strong. But on the other hand, I think if you got a rally, like Greg's talking, if you had a 20-25 cent rally with really good weather this spring, a person may be able to push acreage just a little bit. I'm probably, with a normal spring, probably in that 87.5 range on corn. I think bean acres are going to be fairly stout. The 83.5 the Outlook Forum came out with, in my opinion, was extremely low. Last year they were 4.2 million acres low. I don't know if they're going to be that low this year, but I certainly think that they're low, and I think they're a little bit high on corn acres unless we just get a really good spring with some sort of a rally that's enough. Because as you guys know, with input prices where they're at, which are pretty similar to last year, and then we're looking at a 50-cent lower insurance price for the spring, margins are pretty tight.
Yeah, I want to follow up with you just a second, because you've traveled a lot with Channel over the last 3 months or so, and you still believe that soybean acres will be fairly stout, more than the 83.5. I think you're up, where are you, around 86? Something along those lines, 86 million acres. That would depend primarily, Matt, I suppose, on the guys in the South and the guys in the Northwest Corn Belt continuing to plant soybeans. But their numbers don't look nearly as well, I don't think, and they certainly, in the South, can plant other crops. So are you sure?
Well, I mean, that's what I'm going with for right now.
Right now, he's going
I
with
would
that.
say a lot of guys we've talked to in the Delta have overwhelmingly said that they were planning on planting a lot of beans to begin with. And if you look at what their weather has been thus far in the last week or a month and a half or so, their plantings are running way behind for people who can start early in the South. And then you talk to guys in the Dakotas, and a lot of those guys had 120 bushel corn last year on 140 APH ground, and their basis was $1.10 under. And so if you guys want to put yourself in their shoes, that's a pretty tough place to talk markets. And bottom line is, a lot of those guys are going to have to back off on corn plantings. They're a whole lot more diverse up there. There's probably going to be a whole lot of spring wheat, and there's going to be a lot of beans planted in the upper Midwest. A little bit of everything.
Yeah,
I mean,
dry
they can
beans,
plant,
right?
they plant
Pulse
pinto
beans.
beans, they plant all kinds
They
of things,
plant-
but they are
they
going to
plant
plant a lot
about
of
5
soybeans too.
Yeah, they plant soybeans. Aaron, do you hear the same thing across the wide range of Growmark's ability to reach into those places?
Yeah, I think that's right. I think corn acres will be back off. I'm not quite thinking they're going to back off as much as Matt. I'm closer to that 89 to 90 million mark. I think we'll get there just because our weather guys continue to say that April and May is going to be pretty good. And I think if we get some warm weather, I think we're going to see quite a bit of corn planted. I think the concern, at least when you get to the southern third of Illinois, just for an example, a lot of anhydrous still got to go on. They only got 30% of their anhydrous on last fall, which is a low number for them. So we need this weather to shapen up pretty quickly in order to get some of that prep work done in order to plant some of these corn acres. But I think if we can continue to see some of this weather continue to improve, I think there'll be maybe a little more corn than what some of the markets think and planted.
Chuck, do you have a regular formula for the way you like to go about marketing a new crop, whether it's corn or soybeans, coming into the year? So do you want to have 20% priced by, I don't know, June, another 10% after that before we get to August? Do you have a way that you like to go about marketing? And depends, I suspect, some on whether you have storage or not.
Yeah, everybody's pretty much in different situations out there. It was a lot easier when the profit potential was a lot larger. So when you look at, an upcoming year like this, I think a combination of tools is a way to get it done. Some guys, again, strictly cash marketers. Some guys have been using options, hedge to rise, futures. In the situation you're in here, it's a pretty, when you're down here on tight margins, and when you look at, there's still potential to move this market. I mean, it looks pretty bearish right now. That's all you guys hear, read. That's the general flow of the market. But again, remember, they're all basing this off of pretty much big-time yields again. Most projections are the second highest yields ever for both corn and beans. Not to say we can't make that, but you go back and look in history, there's been very few years when you have a record crop that the preceding year comes anywhere close to that. So I think you got to be careful in how you do this. Don't want to be overly aggressive and use multiple tools. I think Matt brought it up here. When you're looking at prices that are at break even or maybe below there, I think it requires some more patience and looking at different ways of getting it done.
Go ahead.
Todd asked me to talk about hedge-to-arrive contracts as a way of marketing ahead, but yet not locking your basis. Hedge-to-arrive is simply locking in the futures part of your cash price first, and then establishing your basis later on. Your futures minus your basis equals your cash price. And if you think the basis is going to get better, but you want to lock in your futures price now, you would do a hedge-to-arrive contract. And it costs anywhere from 3 to 5 cents usually, so you have to assume the basis is going to get better by more than 5 cents in order for that to make sense. Otherwise, you're just better off with a cash grain sale. Last year, we were talking about what we thought basis levels would do, and I said the 5-year average was 10 to 12 under, but we've had some pretty small crops, and I think the consensus up here last year was if we have a big crop last year, which we did, basis levels would get weaker, and they did. Our basis in Champaign was 32 under at the worst, first day of October, and then it snapped back dramatically because farmers had storage, they didn't like the price, they didn't sell, and so a month later, basis levels were 15 cents better. But basis levels can get worse if we and I don't think there's any reason to get nervous or get anxious about worrying about the basis dropping yet. Typically, we want to see how many acres we plant, what kind of start we get off to, and really, we don't see the basis fall out of bed until after pollination. If everything still looks good on August 1st, then you'll start seeing that basis level drop from, we're posted at 25 right now. It might get as good as 20, but if everything looks good and if we plant a lot of acres, basis could be in the 30s by fall, but it won't fall out of bed in the next 3 or 4 months. We'll have to get to past pollination, and then if everything's in good shape, then you might want to start thinking about getting basis locked in.
So let me follow up with you a little bit so that I understand this. But if you're at 20 or 25 under for corn, for new crop at the moment, basis isn't likely to get much tighter than that, I would think. So is there a reason to use an HTA at this point?
No, unless you really, there's no reason to use HTA right now unless you think the basis is going to get a lot better. And we won't know that until A, we see how many acres we plant on March 31, and B, what kind of start we get off to. So what elevators typically do is we look back at past history and say, if we have a normal crop, this is what the normal basis is. And of course, normal or average is a compilation of all these abnormal years. So every year stands on its own. We probably won't be 25 under in the fall. We might be 10 under if we have a short crop. We might be 35 under if we have a bad crop. But we don't know today, so we're going to start at 25 and then adjust accordingly.
Yeah. I'm big on just trying to learn a little bit from the previous years to use it for the future. And I think if you look at this year, and Greg would probably agree, going into the fall, I don't think any of us thought that the basis would pop back like it did. For guys that put corn in the bin, if you look at that 1st of October time frame, like he was talking, your cash price, so the basis that you've picked up has been 40 cents plus in a lot of areas. And so if you put corn in the bin, let's try to manufacture as much as we can out of our storage on the farm, because I think sometimes maybe we rush to, if in December the elevator opens up free DP, we all want to take free DP, but core in your bins is one thing I highly recommend, but on the other side of that, the basis has continued to get better this year. So if next year we're in a full carry market again and we have a very wide basis at fall, use your storage for what it's good for. And then, this past year in December, a lot of guys sold the carry in the market. The nice thing about it, so basically they hedged it. In the July, the nice thing about that is as the basis improved, their real cash price just continued to improve. Plus, they picked up the 30-cent carry.
Aaron, are there other tools that you would use rather than an HTA?
I think there's spots where I think that's good. I think, I just caution, especially on old crop here, to get too tied up into, basis moves. Obviously your volatility is going to continue to be in your futures markets as opposed to your basis. Typically basis just doesn't move a lot. I think the concern here as we move forward, at least on the old crop, is every day that we go by that the farmer does not sell, that means one less day we got to move this crop to prepare for harvest again. Okay, so that continues to shorten the window. And if you continue to have a lot of old crop corn that's going to have to move, at some point, you should realize what that could potentially mean for old crop basis, right? As we continue to narrow that window and have to get ready for the next harvest. Now, somebody's going to carry old crop corn, either the elevator or the farmer, right? If we're going to have a 1.8 carry out, somebody's going to carry it, but we still have quite a bit of corn that's going to have to move here at some point on the old crop time frame to prepare for harvest, especially if we have a good growing season and we got to try to make room for that next crop. But I think here on the old crop basis, we've got a very firm basis for considering the time, considering the crop that we had and the carry out that we had. So I'd keep that in mind. I think the other thing that we need to continue to use is if you have grain stored either at home or in the elevator, you can continue to take advantage of some of the offers that your elevator provides. What we've seen is you get 2, 3 o'clock in the morning, the European market comes online and buys corn on a certain day. And I don't know how many of you are watching the market at 2 or 3 in the morning. I know I'm not. I'm trying to sleep. But the market moves around in these time frames that, you know, you're not able to watch it. So if you continue to have these offers in at the elevator system, you see the market closes at 7:45, it reopens at 8:30. We seem to have a tendency to fade then at that point, and you miss some of these opportunities. So if you have some of these futures prices in mind that you find attractive, man, I'd really encourage you to get those offers in, especially like 11 o'clock today or 11 o'clock on March 31st. You know, we have these markets that spike up, and by the time you can get a hold of the elevator or pay attention, that thing is gone. So I think that's one tool you got to continue to use here, especially if there's prices that you like here moving forward.
So this is one of the things, Chuck, I think that has changed over the last decade as overnight trade became normal trade, and then as elevators began not just having bids that they posted at the end of the day, because trade was happening electronically all the time, but your bids changed constantly all day long, correct, for most of the elevators. And so farmers really do have to be more active in the marketplace than they ever have been.
Well, you need to leave your orders in there where you want to sell it at. And that environment has changed so dramatically where we move and trade all night. The market can be jump back and forth. You can miss an opportunity. And in this environment, again, you want to have those prices in there. Set your goals, set your price goals. I don't care exactly where it is. Everybody's different. But you need to have a price that fits your farm that you're willing to let it go at. And we're, again, in a different environment simply because we're building inventories. We've got more than we had in the previous 3 or 4 years. And that means you're back to what we used to have to do is pick a level that on your farm works and take advantage of it when it's there.
You suggest that we have more than we've had in the past 3 or 4 years, but last year we started out at 2.2 and ended up at 1.2 or something along those lines. This year we started out at 2.1 or thereabouts, and now we're at not quite 1.8. What's the possibility on old crop that will continue to dwindle the size of that carryout?
Well, I think one thing to consider why they've been dwindling and using this crop, it for most people was a low test weight crop. We've been over in Ohio where they had test weights as low as 58. What is a bushel of corn? It's energy that's created and stored. And when you have a low test weight crop, you don't get as much out of it, whether you're extracting it for ethanol or whether you're feeding it to livestock. So I think that's one of the components. I think when you look forward to on the corn side of the equation, if we have lower acres and have a yield again in the lower 160s, your carryout will be less. So that's a little bit of a positive, but when you, again, I think it's imperative to pick where you want to let the crop go, have a goal, and take that and work with that. And then there are other tools out there if you want to attempt to reown the crop, or some of those variables out there that can change the price. But we're in a trading range window. As Greg talked about, one of the components we don't know about yet is acres. Once the market knows that, it moves on. What's the weather going to do? As we reduce those variables in production, whether it be good or bad, bigger or lower yields, the market adjusts the price to those factors it knows as it goes down the road.
Who's got a question they want to ask? Anybody? Yes. Okay, so the question, I think, and let me see if I've got it right, so is that they watch the basis every day. They have an idea of what normal trends would be like and when basis normally would appreciate. And for this year, you're wanting to know when there might be differences and when basis is likely to appreciate. And yes, for old crop corn.
Well, in my opinion. Are we on? In my opinion, we got the really big, hard basis push already. In my opinion, I think we went, like I said, we picked up 40-some cents a basis. Now, I'm not saying it's not going to get better, but the bottom line, like Aaron was talking, is that there's a big crop to come to town yet. And so while we've had really strong basis and it's continued to inch forward, the bottom line is if there's a lot of bushels to move, at some point this basis is probably going to get a little more stagnant because we do have such a large crop to move. And I'm not saying we're not going to still see some appreciation, but the big basis pop, I think, is something that's already happened.
Yeah, a 1.8 billion bushel carryout for old crop corn would tend to mean basis levels at 12 to 15 under at the country elevators and small unders, option price to 5 under at the processors. The thing that happened this year is farmers are coming off of 3 good years of financial situation. They just didn't like the price, and so they didn't sell. So even though we have a big crop, the March 31, we also get an acreage report and a stocks report. That stocks report is expected to show 7.7 billion bushels of corn on hand as of March 1. That's a record. That's the most old crop corn we've ever had in the system on March 1, if that turns out to be the number, 7.7 billion. So I agree with what everyone's saying up here. We've seen basis levels a lot stronger than what we would have assumed based on this big crop, but that's because it hasn't moved yet. But I think it will move sooner or later. I don't think too many people will hold on to old crop corn into new crop corn. I mean, the market would say you can get a little bit of carry holding on to old crop corn into new crop corn, but most farmers won't do that. So I think we will see corn move at some point in time. I think if we've held on to it this long, the feeling is, let's see what the March 31 acreage report is. Maybe we'll get a bump there, and then we'll sell corn. If we don't get a bump there, we'll wait to see if we get corn planted, if the weather's good in the spring. But if we get those two things out of the way, I'm not sure why. I don't think farmers will hold on to a big chunk of it for the pollination rally. I think you'll see a fair amount of corn move in that April-May timeframe. Hopefully we get a rally in the price before that. Like I say, I'm hoping for a 25 cent rally, and I hope we take advantage of that and get rid of some old crop corn on that rally.
Other questions? Anybody? Okay. Basis has been strong for both corn and soybeans, right? Yes. We have extraordinary large crops harvested last fall, but basis has been strong. And usage has been good for both. Now, we do have a very large carryout, ending stocks for the soybeans. Corn at 1.8 billion, probably can be argued how large that is, but bigger than necessary. I think most would say 1.5 billion is a comfortable midpoint carryout. That's about the numbers USDA uses it in its ag form going forward. They put 1.5 as the carryout going forward. Still, basis remains really strong. I'm not sure that these guys are convinced that they have to move this crop at any time yet, that the basis is really going to fall out of bed. And I know you've been making an argument that it's going to.
Well, no, I don't think we're making an argument that the basis is going to fall out of bed. I think the futures could fall out of bed if the acreage number is big enough and if we get off to a good planting start. No, the basis levels will stay at, even if everything goes well, I think basis levels stay at 10 to 12 under. They might get a little bit better. I don't think they'll get a lot worse. It's just that they won't get better. But if the basis stays relatively unchanged and your futures market goes down 30, 40 cents, your cash price has just gone down 30 or 40 cents. So I guess I'm not thinking the basis is going to get worse. I don't think it's going to get a whole lot better. It might, it's going to improve by about 3 cents a month. That's the cost of carry. So you'll see basis get better by 3 cents a month. But if you're paying DP charges at the elevator, you're paying 3 cents a month. So it's kind of a wash. So I guess I don't see basis levels being the big mover. I think the futures market will be the big mover.
Yeah, but collectively they have money, right?
I hope so.
At this point, collectively they've got money. And I think I said up front that this is a game of chicken, but usually one side's better funded than the other by far. These guys are pretty well funded at the moment, and they really say, I want to make money at it. I know where my break-even prices are. I think they can wait it out. Matt?
I guess I'm going to go back to what I said earlier. If you guys are like me and you've looked at your profitability scenarios for 2015, we can't assume the kind of yields we had last year if we're going to be realistic about it. Let's talk about what the banker is willing to look at when we're looking at cash flow. And so if I'm looking at that situation for 15 at normal yields, then I'm looking at significantly lower incomes per acre. And so given the situation that I have on yields last year, for most of us, I'm not saying everyone, then I think that it would behoove us to be maybe a little more aggressive on sales, because you're looking at significantly better incomes for the 14 crop than the 15 crop unless something significant happens, whether it be with yield, price, or both.
Oh, can you hear, is it on? At this point, I think corn is like money in the bank. What are you going to do with the money if you cashed it in would be the question. I mean, if you've got your inputs locked in, there's something to be said for that. But as you look at that, I think farmers are satisfied to wait and see what the acres are. I think they're satisfied to gamble on some of that in the bin and see what happens. And again, there's a long ways to go. We don't know acres, we don't know the yield. And as you put us all together, it's simply, what are you going to do with that money? I don't think anybody out there has all their corn left. You move some of it. I think one thing we got to look at too is, are we going to be able to get, what are we going to move before we go and plant? We're not going to move corn if we're in the field planting corn. We're going to wait and do it after we get done planting. So there's a window of opportunity here if you want to move part of that crop as we get ready to plant corn.
Interesting that you said money in the bank. I noted yesterday that if I lock money up for 15 months, I can get 1.15% on it.
0.15.
Yeah, 0.15, yeah. Sorry. Not much. Not much. Not much. So money in the bank. We talk about it on a year quite a bit, where we talk about the Argentine farmers using, soybeans as money. It looks like U.S. farmers are doing the same thing, relatively speaking.
Maybe you can do better. They can do better than at 0.0, whatever you were talking about, Todd. If you hold on to it, maybe they're looking at it that way.
Well, I'm not so certain that they're not.
25-cent rally, if Greg's right, would more than exceed what you're talking about.
Right. So there's reason to wait, I guess. Maybe. Or maybe I see heads shaking down on the other end. They're saying, no, there's not. They're shaking on the other end. Todd, you're just wrong. You're just wrong. Right, Aaron? There's just not reason to wait, in your opinion, it appears to me.
Well, I still think we're going to get a little bit of a spring rally here, but I just can't be bullish at this point. I mean, I don't think we'll see enough in basis to justify holding on too much into the summer too. So they'll still, like Greg said, I think if you get that 15 to 25 cent rally, I think you reward the market and move on.
Todd, if we let's look at this from last year, like Greg was talking. I mean, obviously, none of us are going to be able to hit the high. It's hard to hit the high. But the bottom line is, we all thought that moving ahead, we were feeling like beans should be moved and maybe selling corn as it rallies. But what did we all do last year whenever corn got back over $5 basis of D's? Were we selling the heck out of corn, or did we get bullish? Because a lot of people got very bullish, and I think the main thing, at least from my vantage point, is I want to know exactly what my cost of production is, and then I want to be able to market according to my cost of production. And whenever I look at that, maybe I'm not going to sell all of my corn bushels right now, but I mean, I'm always for gambling bushels, because I know most of us are gamblers. That's the way we do things. But the bottom line is, I want to lock in as much profit as I possibly can. If the market continues to rally and I still have corn to sell, I'm going to sell more.
How much? How far are you going to sell?
What do you mean? How much of my cash, or how much am I going to sell for 15, or what are you talking?
15.
Well, I think whenever we look at 15, it's a little bit tougher, obviously, because last year when we were sitting up here, none of us knew we were going to have monster yields in this part of the world. What was Macon County, 236 I think that was the high for the state. I mean,
Yeah,
who would have
236.
who would have ever guessed that last year in the first part of March? And again, high yields kind of covered up a lot of marketing mistakes. But if I'm looking at this, I'm kind of waiting for a rally. We do have a fair amount of hedges on, and so I don't necessarily want to just talk about what we've done, but I'm looking for a little bit more of a rally because I'm probably a little lower on acres than maybe some people are. I do think we're going to need to get the combination of the rally and good weather in order to get a high acreage number, and so I'm probably holding off a little bit. But if I do get the 25-cent rally like Greg's talking, I'm definitely going to be selling corn. I would probably lock in at least a third of my crop if I haven't done anything yet.
I just want to point out, I'm getting credit for a 25-cent rally up here. I just want to remind everybody, I think in the big picture, we're headed lower. I think corn can be $3.25 in the fall. I'm just hoping we get to $4.25 new crop corn. So I want to take advantage of this 25-cent rally. You know, we got that last year, March 31st. That report was friendly. D's corn was 486 when we were speaking here. It got up to 513 on April 8th. 513, just a few days after the report. But in the fall, it was 312. We lost $2. So I think it's kind of the same situation. Again, we want to take advantage of any positive news, of any small rallies. I don't want to say I'm bullish. I just want to say I'm short-term friendly, but longer term, we want to use those rallies to get corn and beans sold.
Wrap up thoughts on soybeans.
Okay. Soybeans are a lot easier for me. South America planted a tremendous amount of acres. They had an average yield, but due to the sheer number of acres, they're going to have a record crop. I think we're planting more beans here in the U.S. Ourselves, and I think South America is going to plant more beans six months from now, and here's why. Beans were $12 about 6 months ago. The beans have dropped about 30%. And so U.S. farmers are getting 30% less for their beans. The Brazilian real has dropped in value 30%. Their farmers get paid in U.S. dollars. So bottom line is they're still getting $12 for their beans. So do they have an incentive to plant even more beans next year? Yes. So we're looking at one big crop out of South America, one big crop out of the U.S. last year, potentially another big crop based on acres this year, and another big crop. You're talking 4 crops back to back to back of big bean crops. So we want to get beans sold. I think there's more downside than upside in the bean market. And again, in the short run, we may see a little bit of a rally, but we want to use those opportunities to get beans sold.
I've been a little bit optimistic on the corn, but I think on the bean side, it's simply hard to overcome those numbers as far as building world stocks, building U.S. stocks, unless we have a weather event. So selling beans, if you're going to grow beans, is a priority over selling corn at this point.
I had a lot of guys tell me last fall they were going to push their bean acreage pretty hard, and I asked them, well, how much are you going to hedge? And they didn't really know. They didn't know if they were going to hedge any. And I said, well, you're basing your decision upon good bean prices. If you're basing your decision on good bean prices, we need to lock some in. I'm like these guys. I mean, I'm not real friendly to the bean market. When you look at world situation, I mean, the world stocks to use, or the carryout, is going to be the size of the Brazilian crop at the end of this marketing year. And so that's the most we've ever seen, both from million metric tons of about 90, and also from the stocks to use, which is 30% plus. I just trying to shine some light on the bean market is tough to do at this point. From a producer's perspective, I'd certainly think, if nothing else, we need to get a floor under these beans. I think we need to have most, if not all, of our APHs locked in, especially if we get any strength in these markets. But I'm going to be very cautious with beans, a whole lot more than corn.
Yeah, the only thing that concerns me about the bean market is that everybody is bearish soybeans. So we'll see what happens. But I think we've seen the producer do a pretty good job of selling old crop beans. 2 or 3 weeks ago, we saw cash beans back over $10. The producer, for the most part, was in a very active seller. Once again, that looks like a smart decision today as the market has trailed back down. But I think if we see some sort of spring rally here, which I think we'll see at some point in the soybean market, back above 10 to 10.25 on November beans, I think you got to be a good risk manager and get some stuff sold here moving forward, because like the rest of the panel say, that just the pure numbers, looking at the data, looking at your possible scenarios for ending stocks here moving forward if we do plant all these beans, it just doesn't argue for beans being above $10 here as we move into the fall. But the one thing that probably would caution me just a little bit is the fact that there's so much bearishness in the market. I don't know if it cautions anybody else or not, but there is a lot of negativity in the bean market right now.
I have one last question, and I think I will follow up with you, Aaron. Is there any reason to believe that the decision to allow Argentine soybean oil to come into the United States and be counted in the RFS could change fundamentals for soybeans?
I guess too early to tell at this point. I guess I don't have a strong enough opinion, Todd, to know if that's going to change things a lot. We did see we've seen some very strange things going on in the soybean products markets earlier in the year than typically. Last fall when soybean meal couldn't get out to the east because of transportation issues. We talked about importing meal even back into the fall, which seems kind of odd since we're right in the middle of bean harvest. I think that situation's we're going to hear about that again probably this summer. But as far as the oil, I guess I don't have a strong enough opinion, Todd, to know.
One of the things that I'm tasked with is to make sure that I follow what the ag economists upstairs are doing. One of the good places to do that actually is on social media. You can follow Dave and I on Twitter if you want. And before we get to the 11 o'clock, I'll post my Twitter feed into the website. So if you don't know what that does, mine's at Commodity Week, but it'll be at willag.org before 11 o'clock this morning. David is at David A. Dickey. Scott Irwin, John Newton, Gary Schnitke also all have Twitter feeds. Several of these folks, including Matt, have Twitter feeds as well. Scott made note that on the Argentine bean oil, that it might be that Washington is thinking about the RFS. And if U.S. EPA does not change the RFS, we're going to have a whole lot more bean oil this year and next. Vegetable oil to make biodiesel with. To count. Whether that'll have much of an impact, I don't know, but his theory was he thought it was interesting that they opened it up, and it may open the door for them not to change the RFS at all. And if they don't change the RFS, we're using, I think, 1.28 billion. I think 1.228 billion is the number for bean oil this year, but that starts to ramp up pretty quickly. And if I remember correctly, we can produce about 2 billion gallons in the United States, I think, annually. I think that's the number. So there are some changing numbers that we'll have to deal with over time. Let's give these guys a nice round of applause. We appreciate all that they do. Again, you can hear them: Aaron Curtis, Matt Bennett, Chuck Shelby, and of course, Greg Johnson.